As the portfolio manager of the Platinum Asia Fund, can you tell us a little bit about the history of Platinum, your background and the investment team?
So Platinum was founded in 1994. I joined Platinum more than 12 years ago. Prior to joining, I was actually a medical doctor. Like other guys in the team, a lot of us come from very non-traditional backgrounds. After doing a business degree, I joined this firm. I'm mainly focused on looking at Asian securities. I'm investing equities in the Asia region. About 5 or 6 years ago, I started managing part of the Asia Fund, and about 2 years ago, I started managing the whole of the Platinum Asia Fund.
How do you manage an Asian portfolio from Australia?
Okay, so in Platinum we've got 4 analysts dedicated exclusively looking at equities in the Asian region. And each of the analysts have specific geographic responsibilities. Because as you can imagine, I mean, each country in Asia are quite different to each other in terms of the history, the culture, business practices. So having that helps a lot in terms of knowing the nuances of how businesses work. And what's unique about Platinum is also that the Asia team sits amongst a team of global sector analysts. Platinum has analysts organized in groups of different industries, and having access to those global guys and girls and analysts can actually help us to enrich our understanding of the businesses and therefore help us manage our investments even better. So that's quite a unique feature for the organization. And of course, our analysts travel to Asia on a regular basis for fact-finding missions, visiting companies, visiting the company's competitors to better allow us to understand what's going on the ground, and that clearly helps in the investment process.
What are the investment objectives of the fund?
So, I mean, it's quite simple. It's about generating long-term capital returns for our investors by trying to uncover undervalued securities in the Asia region outside of Japan.
Your strategy focuses on absolute returns. Can you describe your typical net invested position and why it changes?
Okay, so the exposure can range between 50 to 100%, but typically in the Asia fund, the exposure ranges between 80% to 95%. And we adjust the exposure based on the amount of opportunities we can find in the region. I mean, at a time when there's a lot of undervalued stocks available, we tend to have a higher investor position. Whereas on the other hand, when we feel that the market is a bit exuberant or that stock prices are high relative to our assessment of the fundamentals, we tend to have a lower investor position. An example would be that before the GFC, the global financial crisis, the market was actually very expensive, and our investor position went down to as low as below 70% just before the GFC. And of course, post the GFC, our investor position sort of went all the way up to more than 90% or so, just mainly because at that time the stocks were very cheap and there were a lot of opportunities available to be invested in.
Can you talk about the investment philosophy behind your strategy?
Okay. So the strategy is absolute return, benchmark unaware, which means we don't follow the stock indices. I mean, also it's a very much bottom-up process, meaning that we spend the bulk of our time looking at businesses, understanding the fundamentals and also the potential growth drivers for the various businesses, and then look at the price. And if the price is below what we think the businesses warrant, we can invest in the companies. So as you can imagine, what we do is we look across the opportunity set in the Asia-Pacific region outside of Japan, and just search for those businesses which are undervalued given the fundamentals. So really it's about identifying businesses which are sort of underappreciated by the market and therefore is on offer at a cheap price.
In terms of process, how do you select stocks for the portfolio?
Okay, so the process really is 3-staged. I mean, idea generation and development or working through of those ideas, and then putting those ideas into the portfolios. Idea generation can come from various sources. I mean, come from a quantitative screening process, which means that we draw out a selection of stocks based on specific matrices or of criteria from our vast sort of database or data bank. So that's one way to generate idea. Another way to generate idea is just through the knowledge and the know-how of the analysts we have here. Given that a lot of these, the analysts have quite in-depth understanding of various industries or the regions through their travels or reading or various ventures, they often can pick up opportunities through just, innately, they can pick up some of these ideas. And then a third source of idea generation perhaps is coming from the global team. As I mentioned before, all of us at Platinum sits in one office in Sydney, Australia. We've got guys, looking at various industries globally, and sometimes what they look at may be relevant to what we can actually investigate in Asia as well. There's certainly quite a few examples where there's a great deal of interaction between the various teams, the Asia team and also the global sector teams, which again, just enriches the process of idea development and also portfolio construction. So once the screening is, has generated a list of stocks, the next step is really for the analysts or the different teams of analysts to work through those ideas. And what it means is it's a very thorough process in which analysts try to find out as much as he or she can about the stocks or the industries. And sometimes, working with the global team to work out where this company, for example, in Asia, sits relative to the companies on the global basis. Is it, in terms of quality of the business, in terms of management, in terms of their position in the industry, is it good? I mean, although it looks good in Asia, how does it look if we compare this against the rest of the world, another company in America or in Europe? So that's quite an interesting exercise to do. And so after working through the company, understanding the businesses and the competitors or dynamics, the next step is really to look at the company as one, at a holistic manner, and then to compare that idea against other ideas that we have found in recent times, as well as the ideas that's already in the portfolio. And so, as you can imagine, the process, after this process, we end up with a portfolio of stocks. And these stocks represents, the ideas which we feel offers compelling risk-reward characteristics to our clients.
Being an Asian equity strategy, how do you determine the geographic disposition of the portfolio?
That really depends on where the opportunity are available in the region. So if you go through the history of the portfolio, the composition, geographic composition of it varied quite a lot. When China was offered a lot of opportunity, we had a lot of the portfolio in China, vice versa for India or ASEAN region. So it really depends on where the opportunities are.
Your strategy can have a broad equity allocation across the region. Can you tell us how you manage currency within the portfolio?
So our currency exposure in the portfolio is really based around our stock exposures in the various regions. Stock in China would have RMB earnings. Stock in India would have the Indian rupiah earnings. So we generally leave it at that. However, when we have specific views of currency moves, we can use currency hedges to manage that risk.
Asian equities can be associated with periods of high volatility. How do you manage volatility within the portfolio?
We can use high cash position in the portfolio. We can short stocks or stock indices to try to manage those volatility. And of course, our investment philosophy is to buy undervalued companies which have strong fundamentals. And so in times of volatility is exactly the time that we can deploy our capital to actually take advantage of the dislocation in the markets.
What sort of investor does the fund suit, and what's the recommended time frame for that investment?
Okay, so the fund is suitable for investors with a long-term time horizon, minimum of 5 years, I think. The reason being is that Asia is a big part of the world now. It has almost half of the world's population, and despite the slowdown that we hear about out of China or some other Asian countries lately, it is still going to be the fastest growing region of the world. So if we look at Asia in 5 years' time compared to today, it will be a vastly different place. The business opportunities that we can see, going forward for the next 5 or 10 years will be tremendous. So in order to actually allow those investments to bear fruit, it will take a bit of time, and it would reward the patient investors.